soaring in its market debut on Thursday, trading under the ticker symbol SNAP. The stock soared to more than $24, well above the $17 pricing for its historic initial public offering.
But is it worth the money? The company now has a valuation of more than $30 billion. Pretty incredible. And it still loses a lot of money right now. Typical tech company, I guess. We're back here with Paul Schatz and John Levin. And, we were discussing this market overall, right? And whether there were any systemic risks. You're not concerned about that. But you are worried that things are getting a little frothy because everybody's kind of thinking the same. You see an IPO like this one, a tech company coming out, and does it bring you some memories of, say, I don't know, the year 2000?
Is it going in the index? Why is it SNAP? It's $30 billion.
Yeah.
The S&P index people have created a great index. If they didn't pick as well, it wouldn't do as well.
Mm-hmm. So what are your thoughts on SNAP right now, and what does it tell you about overall market sentiment?
Well, clearly it's representative of a frothy environment. But as we saw in 2000, frothiness started in 98. It took 21 months to get us to out of control.
So we could have a good run first.
We certainly could. Regarding SNAP, I asked my 13-year-old daughter, what do you think of it? Because she uses Snap and Instagram and all the rest of the nonsense.
No.
So I said, which one's more important? And then I started doing the research. This company spent over $1 billion for cash burn in the last year. Better revenues, bigger losses. They're not the 800-pound gorilla in their industry. I mean, this to me is...
So you think like a competitor could come along and outsmart them at their own?
I think they're going to fight Facebook. Facebook has essentially unlimited resources. They're the 800-pound gorilla. I mean, for me, it's a total of, I don't care if Snap goes up 25% from here, even if it's going to be the next Microsoft or Apple or Google. History says you wait 3 to 6 months. If it's a good company now, the price will settle out, it will stabilize, and then you can buy it. But I think it's insane to go buy and trade this almost garbage now.
All right.
Wow.
That was
almost garbage.
Exactly. Almost garbage. John, let's go back to the markets. We know that we've built in these expectations for tax cuts, for regulatory reform.
Right.
The market obviously is pricing in a lot of this. To go back to what Trish was saying in terms of some of the concerns that are out there, when will the market say enough is enough? What are the triggers that we have to be worried about that what we're not getting out of Washington is going to start to impact the markets?
The markets do what they're going to do, and we all talk about triggers after. Markets anticipate.
But you have some thoughts.
So I do have some thoughts. I would say that there are a couple of elements in it. Just to take a hierarchy, is the following. So if you look at what the proposals are in theory that you talked about, Trish, one that's really positive, in a sense has low cost, is repatriation. On the other hand,
bringing all that money that's sitting there offshore, $2 trillion, bringing that money
owned by these companies. The argument is how to spend that company by money, but who's going to spend the money by whom, infrastructure bank, controlled by who, but the money's going to come back. That seems like a relatively free, positive thing for the economy. And stocks, and valuations. When you come to tax cuts, to my way of thinking, there's a hierarchy. There's a hierarchy here. One, I think to some degree they don't want to pay for it, which is they're going to score the economy. I've had some people say that they're going to score the economy with $1 trillion or more growth. Two, a border tax is a really complicated thing. And we could spend time on now, but everybody who's looked at this, and I think I saw a scoring that Gary Lindsay did, it's about 2/3 of the tax is border tax recovery. There's a lot of money offshore in low tax bases where they can recover, but still border taxes are an issue. The third is this discussion of non-deductibility of interest, whether prospective, and I can't believe retrospective. So that's the first thing, is the technical thing of what's the other side of the good news. Then there's the question of what time do people begin to worry about it. You can have a legislative process here which doesn't only involve the Democrats, but involves the Republicans. Everybody wants certain things. Look at healthcare. So the path to getting a result, people may say, hey, wait a second, we're not going to have a result so quickly.
But that's not going to end the bull market. Even if we stumble and the Republicans start fighting, my view is you're going to have a market event, a significant one to the downside, September, October. But to my view, this bull market gets killed, unlike 2008. This one gets killed if Merkel loses and if the French elections go off the deep end, then I think you have what everybody else felt before, was that we killed their bull market. So I think this time somebody else is going to kill our bull market in 2018.
But unless you believe in this sort of Trump philosophy, which is that we are increasingly dependent on ourselves and we have a somewhat more isolationist approach to all of this. If we can grow our economy, maybe we're not so dependent.
That's more rhetoric than reality. I don't think we're a global economy.
I think Paul is dead on that subject. I was answering proximate causes inside the United States. I think Penn's a real issue, Merkel's an issue, and I think the idea that we live in a gated community is going to be tested, whether it's Mexico or China. Separate from a border tax, we have a $300 billion deficit with China. Are we going to do something with that?
I'll tell you, there's going to be some fascinating times.
The German
for sure. But I like this idea.
In the last 15.
I agree. 23,000 though is your call for Labor Day.
Yep.
Paul
By
Schatz,
Labor Day, then we go down.
Okay.
John Levin, thank you so much.
Okay.
Way more Wall Street Week after this.
The market